Okay, everybody, here we go. It is me, Gregory Mannarino, Monday, January 23rd, 2023. So, people, look, we got a problem here, and I think it's pretty evident, but it seems to be getting worse. So, we just found out that there's this issue. Well, no, not that we just found out. This is an ongoing saga. It just doesn't seem to end here. Referring to this issue with regard to the Bank of Japan several weeks ago, they allowed their 10-year yield to float as opposed to being fixed. Obviously, the Bank of Japan has been engaged in yield curve control for, like, I don't know, it almost seems like time immemorial here. Now, um, so this issue with the Bank of Japan and how they've been managing the yield curve, basically pumping their economy and the markets full of debt beyond anyone's wildest expectations, is something that's being followed now by central banks around the world. But um, there is a new issue that's just coming to light here. I don't know much about it just yet, but some emergency meeting was canceled so they can reconvene at a different time because there's an underlying issue developing here. I mean, duh, seriously. It's part of the whole thing. But my take on this is, and look, sometimes little bells goes off in my head, and I'm sure yours as well. Is the Bank of Japan, or is Japan itself here a canary in the coal mine? You know what? I think there could be a case made for that. So what you and I are going to do is keep our eyes on that. I'll keep all of you in the know. So on the back of that, what's happening here is global bond yields are rising. Bonds are selling off. Here in the United States, 10-year yield, same problem, same issue. It's rising. The MMRI came up this morning. The relative dollar strength, last time I looked at it, really isn't telling us too much. So, all right. So I don't expect anything dramatic to happen here. But again, going back to what I've been saying here, we need to watch this. We need to keep our eyes on the global debt market. We know where this is going to go. It's really a no-brainer, and I think you'd have to agree with me on this here. We have an environment that must be inflated upon. Okay, people can't know this. It's a big secret that no one's supposed to talk about, but it's a fact. Anyway, look, as I am doing this here, think of questions you want to ask me here, like this one here. Why is silver my favorite asset of all time? Most of you already understand that. I'll touch on that just real quick. Then I want to go back. Why is Greg Mannarino's favorite asset silver? Because I just look at a couple of metrics here. The Dow gold ratio, gold silver ratio. And this tells me that silver is just beyond undervalued. So, do a little homework here and look into that. Anyway, so just going back here to the market. So we have this issue lurking about here with the global debt market. Look at the time bomb. You all know that. I've been telling you it's a ticking time bomb for years. It's ticking louder. It's ticking faster. And, look, there's no way to fix this. What you're not allowed to know, but you know already because you follow this blog, is this is a mechanism that's in place because of the backbone of the entire financial system is dependent on more debt. It just can't stop. Okay, it must be inflated upon and inflated upon and inflated upon and added to exponentially just to sustain a static environment. I mean, it's a crazy situation. Central banks can't just buy at the same rate. They can't just fuel the debt bubble at the same pace. It has to be greater and greater and greater and greater. Without that, we turn back to Mad Max. You all know that. Okay. But anyway, so that's what we're going to keep our eye on. As usual, look, nothing changes here. Nothing changes. Not telling you anything new. You and I are just going to raise our awareness further. We're going to keep our eyeballs on the debt market, which is the driver of this entire thing, meaning the stock market and everything else derives value from what's happening in the debt market, meaning everything else is a freaking derivative. Okay, that just adds to this whole freaking thing too. Anyway, so with that said, let's move forward here. You got crude oil catching a bid this morning. You got Bitcoin about 23,000, crypto's doing okay. Gold and silver this morning under a little pressure. All right, I'm not really sure what's going on with that. Actually, I'll tell you what's going on with that. If you were to look at the price action of the paper derivatives, SLV, GLD, you'll see these things have been in a screaming uptrend for quite a while. Are we due for a pullback? Maybe, but what would you do? Let's say, for example, okay, gold and silver start to fall, and everyone, what's going on? What's going on? What are you going to do? You're going to use that as a buying opportunity, in my opinion. Here, you know my take on this, and I'm not telling anybody to do anything. All right, but the fact of the matter is, look, um, we have to be on the opposite side of this trade. You know that debt hyper bubble. The number one in Greg Mannarino's view, to take advantage of that is to be holding gold, especially silver, um, commodities in aggregate. But the number one and number two, silver, gold. That's how it plays out. Commodity exposure is something I've been talking about a lot lately. You all know that. Anyway, let us move forward here. The biggest issue I wanted to discuss here this morning with you was this global bond thing. Look, you know how to keep your eyes on this. In my view, the best possible way is to follow the MMRI, Mannarino Market Risk Indicator, link in the description of this video. And this morning when I was looking at it, it was at 224. Okay, all right. Let's see what they're going to do. In my opinion, okay, and I'm going to just throw this out here, and I want to hear from you. I don't think central banks are done. I still don't think they're done, meaning they're going to continue to fuel the bubble. So how do they do that? Central banks are going to have to get in here, get into the market, and buy more. Simple, right? If you and I are keenly aware that this is going to happen, what do you want to do? What are you going to do? Well, you're going to continue to bet against the debt, become your own central bank, period, the end. Look, I think I offer a lot of solutions and what people should be doing in this environment. It's a no-brainer in my view. There are a lot of other ways too. I've been talking about commodities exposure, longer term down the hall here. Getting exposed to or buying an ETF, which I posted on my free newsletter. Again, link in the description of this video. I sent a few of these out. I'm sure I'm going to do more of these things. And if you want to be long this market, if you believe that central banks are going to get in here and buy more debt, well, if you believe that the illusion of stability is going to be maintained in the debt market, well, what does that tell you? That means the risk on environment is going to be also maintained. So you want to be long something here. You know my take on that. I own a lot of shares of JEPI. It pays a nice monthly dividend. Anyway, that's kind of where we stand here today, people. There's nothing else going on. All right. So what I want to do here with all of you, I want you to ask me a couple questions here. I'll cover them, and we'll see if we can work this out here. So here, let me start with this one. Is the MMRI on TradingView? I do believe that some people did create the MMRI for TradingView. You might be able to just go ahead and look that up. I don't think that's any better than looking at the one on my website because it's color coded and there's a number. But whatever works for you, just raise your awareness here. Absolutely. Yeah. Some of us are illiquid. Yeah. Look, well, of course that, look, this whole system is illiquid. Let's forget about individual citizens here. That's actually a really good take. Let's touch on that a little bit. What are people doing right now to maintain the illusion of liquidity? Meaning they have access to cash. Well, what are they doing here? People are, thank you for that super chat. People are borrowing beyond their freaking eyeballs and then some here, maxing out their credit card debt burdens are skyrocketing. Did you see the video I did yesterday from the mall out here in Las Vegas? It was a dead zone. There was nobody there. The restaurants, I'm like, I don't know how these people are staying in business. So people are getting pretty much maxed out. Yes, people themselves are liquid. So you're not alone, sir or ma'am, whoever you were over there. And the system itself is illiquid. And that's the main issue here. Look, the debt market must be fueled with more liquidity every single day, every minute of every single day. If that mechanism is not in place, people, how do I put this? I've been telling you, we're going to go to a Mad Max scenario. The fact of the matter is, the debt hyper bubble is going to burst. It's going to burst. Are we getting closer to this? I think we're getting closer to this every single day. Is it closer than we think it is? A lot of people write to me and they say, Greg, you know what? You're a little too complacent. You believe central banks are going to continue to fuel this. And I sincerely do believe that, at least moving forward. But that doesn't mean that this whole thing can't turn around in a nanosecond. That's why we have tools, you and I. You and I looking at the debt market in aggregate. You and I, thank you. You and I looking at the MMRI, as I said, looking at the relative dollar strength. All this plays together, so we have keys, all right, to play the game. Understand? Anyway, absolutely. System is illiquid. Individual citizens are illiquid. Why do you think that most people are carrying around a debt burden that they can't support? What was it yesterday? 1 in 3 American families need to borrow just to make ends meet. Do you think that's by accident? How many of you are going to say this is just by accident? That's a cute little caricature with the little heart there. That's adorable. Anyway, um, what else here? Let's see. That leaked meeting was pretty interesting. Any more comments on it? I think is it a surprise? Go check my video on that. I don't think that. Look, they need to keep people duped. Need to keep people in the dark. Um, you know, do you believe they're going to allow people to actually know what's going on here? And as I always tell you, what you and I are playing a game of incomplete information. We can speculate as to what's going on. And I think for the most part, we're nailing it to the wall. But playing this game of incomplete information is is kind of interesting. Where is Nick the Pig? Nick the Pig hasn't been floated out since MMRI 300. Well, if they need to float him out again, I'm sure they absolutely will. There's just no doubt about it. Anyway, so we're all doomed. No, I don't think we're all doomed. Look. This is, in my view, a natural selection process going on here. There are people like you and myself, I'd like to believe, that are able to take in the current environment a little better than most people are. And that gives us an incredible edge. If we realize the system is toxic, the system is rigged against every single one of us, we must consider what we have to do to put ourselves in the best spots moving forward here, at least from a financial standpoint and from other standpoints too. What do I always tell you? Have the high ground. Meaning, if we realize at one point that this whole thing is going to change, but big time, and the environment that we're in is going to change. It's going to get very real. You must have a way to sustain yourself moving forward. Meaning, you need access to water, obviously, food. You need to have this stuff somewhere stashed. Okay, you have to have. I mean, look, not many of us have the luxury of having a big room where you can stash all this kind of survival gear, but you need some of it. You absolutely do. You also need to establish relationships with people. How long have I been telling you to love each other, care about each other, and be charitable? You think I say this for my own health? Well, sometimes I do, because I think we all need to band together. Those of us that understand the situation, you got to establish relationships with people you can count on. It's very, very difficult in this world to find true friends. It's the truth. And I feel like all of us here, we're a big family, and I'd be willing to bet that we can all depend on each other. Buy chickens, yes, that would be one way to do it. I'm a pony. I don't know what that means, but it sounds good. Okay, you want to be a pony today? That's just freaking fantastic. Anyway, all right, people. Look, I think we've covered a lot today. I hope you would agree. Thoughts on copper? Copper up. Look, all commodities, I've been telling you, are where we need to be moving forward. You like copper? Sure. It's a hard asset. It's definitely something you need to look into. Later on today, I'll do a little short on commodities. I'll cover copper there too, and maybe another short throughout the day, and we'll talk more. Look, I've now recommitted to all of you to make sure you're getting the right information at the right time. It's just so important in my view here. All right. Anyway, natural gas. Look, with me, let's just talk about that last thing. Natural gas has taken quite a while up as of late. How does the market work? The market, fear and greed. You all know that. There was a lot of margin debt associated with people that were pushing the price of natural gas higher and higher, and maybe it reached the point of maximum saturation, like this whole thing is going to. And then we got a pretty precipitous drop in the price action. That's a lot of that is margin calls, especially as it was coming down. So that drove the price maybe lower than it should actually be. Does Greg Mannarino, this guy, believe that right now may be an opportunity to buy some of this stuff? Well, yeah, actually, I do. I do. And I think that in aggregate, in general, people should be looking at commodities moving forward. Anyway, all right, look, stockpile commodities. Look, stockpile gold and silver, especially, okay? But I don't think anyone should be all in on any one asset. I've covered this a million times. You must be diversified to a certain degree, okay? But logically, understanding where you should be putting your cash to work, you understand? Should be pretty obvious. You don't want to take any undue risk here, okay? If you, for example, like a person like myself, if you invest for yourself, if you're putting money to work in the market, all right, and you have the ability to get it out in a nanosecond, all right, that lessens your risk. Also, with regard to being involved in the market here, if you believe, like I do, okay, but just again, this is probably going to be the last one here. If you believe, like I do, that central banks, regardless of what's happening here in Japan, are going to get in here and attempt to keep the debt market stable longer, I think the reason behind that is because they're not done inflating. The moment that central banks are actually done inflating, they're going to allow this thing to implode. They're not done becoming the lenders and buyers of last resort. They haven't created enough dependency on the system. That's how they're going to win here. Okay, they need to create more slaves to the system, more dependency on the system. Once they've maxed that out and they say, hey, you know what? We've pretty much reached our goal. That's when they pull the plug on the current system. They allow the system to melt down by design. You all know this here. That's why they're hyperinflating this debt bubble. You think this is by accident? Really? Honestly, no. I don't think there's a single one of you that do. Anyway, so that's when we get a new system here. And to have, again, access or ownership in commodities here, understanding that a meltdown of the system means that an implosion in the debt market, which will pressure the stock market on a grand scale, cash is just going to move, in my view, into commodities. Cash doesn't grow wings, people, and fly away to money heaven. It just moves from this set of assets into another set of assets. And I also believe it's going to go into cryptocurrencies as well. That's my take on it. You're entitled to your own. And anyway, look, I really got to call this here. It's getting really kind of long. All right, people, look, this guy here loves you a lot from the heart. I love this whole live stream thing and doing these little shorts. A lot of you seem to really appreciate that, so I will keep this going. I will see all of you at the end of the day. We'll do the same thing. So ponder questions you want to ask me, and I will go through these, and we will cover these are great questions here, honestly, and I love that. So that's it for now. And well, I guess that's all. All right, I'll see you.